Hey guys, I was just watching Tesla unload its new Tesla truck, and boy, was this truck just super ugly. I mean, cars are supposed to be curvy, but this truck, it just looked way too straight, and it looked like it was bulletproof, like it was just ready to go out into war. And let's take a quick look at it as it was just announced tonight. So here's how it looks. Yeah, definitely doesn't look like most trucks that you just see going down the road here. So I guess that's a good thing, right? You'll know for sure, hey, is the car next to me, is that one of those Tesla trucks? Oh wait, it looks like a kind of like a right angle. Kind of looks like those, those math problems where they have like the angles that are just way off. And what are those tires, man? Oh man. But Elon Musk, always very innovative, even in designs here. So it's gonna go from 0 to 60 in 2.9 seconds, which is super fast. And it's also able to go up to 500 miles on the top end for one range of charging cycle. So that's very impressive there. That's basically like going from Dallas to Chicago on just 2 charges, which is pretty amazing. And then the stainless steel on the truck is super strong. Yeah, I can definitely tell from just looking at it that it looks super strong. Definitely not disputing that. And it says here that not only did his team hit the body with a sledgehammer to no effect, because people are just slamming sledgehammers into trucks these days, but oh, look at it driving there. It looks pretty sweet. It can carry up to 14,000 pounds. All right, let's get into the stocks that I wanted to talk about here today. So it's almost up to $17,000. I want to try and get to $20,000 by the end of the year, which I think is definitely very doable. Just have to transfer over the money into this Robinhood portfolio. And it looks like the Dow was down about 54 points today, which is essentially nothing. So, not too much movement. Looks like I was hit a little hard here, but you'll see that it was just a few certain sectors that got hit harder than others. So let's get into the portfolio. First stock we'll be talking about today is McDonald's. So this is a stock I have been buying here. So as you guys can see, in the last month, it's down 6%. And then it's actually down 12% from its 52-week highs. So it still has a forward PE of, obviously it's not correct here on Robinhood, but its forward PE is about 22. And that's still trading at a bit of a premium for this stock, but I really don't mind because when you buy McDonald's, you're getting a blue chip company here. It's one of the most recognized fast food companies in the world. Wherever you go, whether that's in India, Saudi Arabia, Australia, they're going to have the golden arches and people are going to recognize that logo and they know what to expect there. It may not always be the highest quality of food, but they know what the menu might consist of and the prices are going to be relatively cheap. It's also a real estate company as well as, of course, they have the usual franchising model, which is very popular in fast food. Speaking of fast food, has anyone tried that new Popeyes chicken sandwich? I just had it for the first time today, and I can tell you guys it tastes very good. I definitely think it's worth the hype. There's also people, getting into fights, and even people dying over this chicken sandwich. I can tell you guys it's good, but it's probably not worth losing your life over. So just keep that in mind. And McDonald's has been trying to downsize from having corporate-owned stores to focus more on that franchise model that we just talked about. So the amount of stores that are under franchised have increased from 31,000 in 2016 to 35,600 by the end of this year. So that's a step in the right direction there. And then McDonald's also has 17 consecutive quarters of increased sales, generating revenues of over $5.4 billion in Q3. So they've also been on the news because their CEO has had a consensual relationship with another employee. So that is, of course, not illegal in terms of the law, It's totally fine for two people of age to have a relationship with each other. However, that is against McDonald's company policy, and shares fell 2.5% overnight, basically, and losing $4 billion in market cap. So do I think that is justified? Probably not. I mean, I definitely think that's more of a black swan event. Last time that I checked, people aren't going to stop eating Big Macs because of something a CEO did. A CEO that they've never even heard of. They don't shop at McDonald's because of who the CEO is. They have two different lanes in their drive-thrus for a reason. No matter if you're rich, if you're poor, people love their McDonald's food. They love their coffee, and they're open at all times throughout the day. A lot of them are open 24/7. And yeah, again, guys, you know that McDonald's, it's going to have food at an affordable price, and that's why it really did amazing during the last recession. And that's some of the reason why I bought this stock, actually, was one, for its name, its food products, its business model, and its amazing performance during the last recession. And it's really getting close to approaching that dividend king status of 50 straight years of dividend increases. It'll reach there in a couple more years. And that's all because it's not because of its CEO and who he's trying to have relations with. That's usually not on my checklist of factors to consider on buying a stock. Definitely don't look at the CEO's love life, and they've already gotten the new CEO into the company. So it's going to be a quick transition. Hopefully he does good with the company as well. And if this is something on your radar, be sure to let me know in the comments. Also, probably a good time to let you guys know to subscribe to the channel and help a small-time YouTuber like me. All right, so the next stock we're going to be talking about is Applied Materials. It got just absolutely clobbered today, down 5%. Applied Materials is a company that supplies equipment, services, and software for the manufacturers of semiconductor chips for its electronics, flat panel displays, computers, smartphones, televisions, and solar products. So a lot of electronic components to Applied Materials. And I just like to think of them as providing kind of those resources for those companies to be able to make the products at the end of the day. Now, this company just had an earnings report last week, and I was thinking about buying some the day of, and looking back on it, I'm glad I didn't, because even though the company reported great earnings that day, the stock went up over 11%. So as you guys can see here in this little chart, the day that it announced earnings was up around 11% that day, and then it just came right back down today. And this was more because it wasn't necessarily because of the company as a whole. It was more the company UBS, one of its analysts had a negative rating on the stock and did not seem very bullish on it for the short-term future here. So that's a reason why I actually bought more of them today and increased my position on it, is because, you know, these analysts, they're not necessarily looking at what the price is going to be 10 years from now. They're looking at what the price is going to be under 12 months from now. So I didn't see this as a knock on Applied Materials' actual fundamentals, and that's why I bought more of it today. So AMAT has just done a great job at growing its cash. Its cash provided by operating activities has actually went from $1.1 billion in 2015 to nearly 3 times that in 2019 with $3.2 billion. And operating activities are basically the transactions that occur as a result of doing business, and they're seeing phenomenal growth like this. Makes me bullish on the stock for the next decade, especially when we have AI technology that's really going to take off here in this 2020s decades. They've also done a great job at keeping their debt low, and they've actually been buying stock back like crazy. That's reducing their total shares outstanding by almost 25% in the last 5 years. That is just absurd to think about. So Applied Materials, another one that I will continue to be adding in the future here. Makes up 2% of my portfolio now. Hope to increase that in the future. All right, and then the next stock we're going to talk about is actually in a very similar industry, and that is Intel. So I added just a few shares to this position, and they're in competition with Nvidia and AMD to speed up the fastest computers here on planet Earth. And Intel is the leader of microprocessors that are used in those supercomputers. Intel had $19.2 billion in revenue this past third quarter and is a massive company with a market cap of $253 billion. This is another company that has a very interesting future because it's invested a lot into artificial intelligence, and the company's management is quite optimistic about this in the upcoming decade. It's believed that 75% of enterprise applications will be using AI by 2021. Enterprise applications are computer software used to satisfy the needs of an organization rather than the individual user. Intel is also trading at a very reasonable value with its forward PE of about 12, which is well below that of competitors in Texas Instruments at 23 and AMD, which is at a whopping 36 PE ratio. Now, there's definitely going to be a lot more competition in this sector going forward, and that's going to put a lot of pressure on these companies to keep investing money on research and development to stay ahead of its competitors. So as you guys can see, I'm up a little bit on this position, but I'm very confident and bullish on Intel in the future here. Again, a very massive company at $250 billion market cap. So I know it's going to be a bit more of a safer investment just because it is so big. It's going to take a lot to take down these giants. And all the stocks we've gone over for the most part have been kind of exciting so far, but this next one is quite the snoozer. And there's nothing wrong with that because as long as it's making me money, I don't really care. Well, General Mills is the market leader in processed and packaged food, ticker symbol GIS here. Stock fell a bit in the last 5 years here, as you can see, and that's because a lot of people felt that they overpaid for their Blue Buffalo acquisition. And people were just absolutely hating on consumer staple stocks. I remember when I first started investing that Procter & Gamble was just getting hammered early in 2018. And then people were saying that this is like an industry that was not going to succeed in the future, as if people were just going to stop using basic household goods. And if they stopped using stuff like deodorant and soap, I would get a little worried there as well. And General Mills, it sells items such as cereal, yogurt, soup, quick bite snacks, dough making mixes and ingredients, pet food, ice cream. These are all things that we're not going to really stop buying even in terms of a recession because people will always need food, and people also love their dogs, maybe even a little too much these days. And Cheerios and Honey Nut Cheerios are actually the top two selling cereals among Americans. Now, I'm more of a Cocoa Pebbles guy, and that's actually made by Post. Not Post Malone, but the company Post. And sadly, General Mills does not make that. Of course, I'm not expecting General Mills to come up with, some revolutionary breakthrough in food that stops, you from ever getting hungry again. But with the 3.7% starting dividend yield, this is a really nice defensive stock. Yeah, as long as it can keeps doing what it's been doing, I expect it to do very well here in the future. And then the last stock we're going to talk about is something that's completely new to my portfolio. I've never bought this stock before, and I'm very bullish on it here. And this is a stock that is very popular here in our investing community, and that, of course, is something I've already mentioned before. It is Nvidia here. Hope I'm pronouncing it right. It's kind of like that cream, Nivea cream? Probably not. Here, this is a stock that is specialized in central processing units, or CPUs, and graphics processing units, or GPUs. And this stock basically shot up when Bitcoin was super popular. As you can tell, right when Bitcoin got really popular here, which was around Christmas of 2017, that's when the stock really took off. And the reason why there's that correlation was that people would use NVIDIA's hardware to do that Bitcoin mining. And once Bitcoin stopped being super popular, some of the demand for NVIDIA also fell. And as a result, the stock price went tumbling down with it. And I can tell you guys that, the stock has really rebounded here in the last couple of months. It's up 46% in the past year. And NVIDIA is one of the big time players in AI. And I can start using a bunch of big words and make all you guys confused because the terminology with this particular industry is quite complex and definitely not something I don't think the average investor would be able to understand. But I can see the long-term vision in it, and I like it because even though I'm not an expert in it, I can put my money with other people who are experts in it, and they can hopefully get me a return here. So they have some big collaborations coming up with other companies that are going to be using NVIDIA's GPUs to enable all new AI applications, as well as augmented reality and virtual reality. They just announced that they're also teaming up with the largest company in the world, Microsoft, to provide startup companies with access to accelerate their AI program. So you guys might already know that they have their own GPU with Tesla, and they're going to continue to develop that with their autonomous driving. And I expect demand for NVIDIA chips to only increase. It has a forward PE ratio of 29, but you can definitely tell me that the stock is overvalued, and I would probably agree with you, but that's all right because I'm going to be holding the stock for the really long term here. I think AI is going to absolutely explode in the 2020s decade, and I expect the stock to continue to rise with it. So let me know what you guys think. I'm also, obviously, I only own one share right now. I'll be dollar cost averaging. That's my favorite strategy. Throughout the 2020s decades, probably will add another share before this year ends and make it a bigger position in my portfolio. So let me know what you guys think of these 5 stocks. Definitely see, as technology improves, these stocks could definitely return me a lot of money. And then maybe if the recession happens here, they'll have some short-term losses. I can definitely see that as well as demand starts to dry up. As always, guys, be sure to show me some love in the comments. Be sure to hit that thumbs up button and subscribe to the channel. As well as let me know if you guys have any questions, and I will try my best to answer them in the comments below.